There's a narrative that's going on at the moment in the retail space of like the market is predictable using an algorithm, and therefore we break down the algorithm into technical analysis, and that's why people are getting maybe overly confident to the point where they start to predict the markets.
Saw one of your podcasts where a guy said, I will tell you how HSBC trades. And I literally spat my drink out and laughed. Technical analysis is used by analysts at banks to paint stories, to put in reports, to send out to clients. The technical analysis for me, waste of time, because you're not going to predict future price movements. You don't know where the market's going to move from ahead of the time. Time is of no consequence. It is all about price and value. All markets are split up into ranges, so specific prices, that's where you want to be trading from. That's where investment banks want to be trading from for themselves, for their own speculation. Everything else kind of in between is just commercial business or speculation by other people. I think one thing that retail traders really don't grasp is
Number one podcast in the trading space, the fastest growing, and that's thanks to every single one of you. Hey guys, before we get into this incredible episode of Words of Rizdom, I want to let you know how you can get a free trading plan. Very simple. Go in the link below, you're going to see two links. One for Telegram. There you'll get free mindset hacks, a free technical course, free updates and polls on the podcast. And then the other link is our new email newsletter. Click that link, sign up, you'll get a free trading plan PDF sent directly to you and get incredible value all week long. Let's get into this episode. Welcome everyone back to the Words of Rizdom podcast, still the number one trading podcast in the world, the fastest growing and the largest thanks to all of you and our incredible guests, talking of which we have an absolute veteran with us today, 30 years of experience in the trading game. And I know we're going to get a lot of insights, not only into his trading, but also all the experience and changes we've seen within this industry over those 30 years. And we are joined by the one and only Paul Scott.
Afternoon. Nice to meet you.
Nice to meet you as well. It's my absolute pleasure. It's great to have you with us.
Thank you.
And I think the best place to start is really just to give an insight to the listeners of where you've worked and the sort of experience you've held over those 30 years.
Yes, that's been a long time. But I started out in 1994. My very first job was with my dad. So my dad was a trader on the London Metal Exchange, a copper and nickel trader for, at least 25 years. And I'd left school at the age of 16, and he gave me about a month off. And then he grabbed me by the lapels one day and he said, right, my son, what are you going to do with the rest of your life? And I went, I don't know. I'm 16. I've got no idea. And he said, right, you're going to come work with me and come down, get some experience, and then I'll try and find you a job with, another broker or a bank. And so I was with him for about 3 or 4 months, learning the ropes, got down to the first day. What the hell is this? I was aware that my dad was a copper trader, but I had no bloody idea what that actually really meant. So we go down to the trading floor. That was at Fenchurch Street, and I walk in and I'm like, this world is crazy. They've got all these people talking in different languages, like we were just speaking a minute ago, contangos and backwardations and spreads, and I was like, I'm just so overwhelmed. Do you know what I mean? So it got to the end of the first day and he was like, so what do you reckon then? And I was like, Jesus, I'll never get the hang of this in a million years. And he went, that's exactly what I said on the first day, because it's not like real life. It's insane. And so stayed with him, like I say, for about 3 or 4 months. The market then moved to Leadenhall Street. So go into Leadenhall Street, get a job, Credit Lyonnais Rouse. The guy that employs me, Peter Tuesley, basically there the day I was born. Mum's still got a picture in the photo album. He was there the day I was born, and I walk in to Credit Lyonnais. I'd already got to know the people there and stuff like that, working on the trading floor. But then walked in, and I'm in there about 10 or 15 minutes. And he goes, Scotty? Yes, Pete. He goes, coffee room. So I walked out to the coffee room. And then he turns around to me and he goes, look, I don't give a fuck whose son you are. I know I was there the day you were born, but you've got 3 months. If you don't get it, you're gone. Because I need people on this desk that understand what's going on. There's lots of money flying around, and you need to be basically on the ball. So I was like, right, okay, no pressure on the first day. Do you know what I mean?
Yeah.
No pressure on the first day. But then, yeah, I stayed at Credit Leonati from 94 to 1998. I started out as a market clerk, as everybody does, which is basically recording deals that your traders making, going around, checking those deals with your counterparty, doing all that, doing manual profits and losses and stuff like that, which I can still do. But working out all stuff like that, and then obviously being a glorified tea boy, and then you go and get everybody's lunch, and you do all that. But you're amassing knowledge as you go along, basically. And so it gets to 1998, and the company that was two down from us, there was Credit Leonati, Deutsche Sharps, Pixley, and then Sugden. And I was really friendly with a guy who was another one of my dad's friends, a guy called Hugh Lefanu. And he's an old Etonian. I mean, the most beautiful guy. I mean, absolutely, honestly, the most beautiful guy. And he says to me, Scotty, dear boy, he said, I want you to come and work for me on the options desk at Sugden. And I was like, right, I know nothing about options, Hugh. And he went, no, don't worry about it. He said, we'll teach you as you go along. So I said, oh, okay. And he said, so how much do you earn? And so I told him, and he went, okay, I'll give you another 10 grand. So I was like, okay, okay, sounds good to me. Get there, and sits me down on the options desk, and again, I was there for about 3 months, learning about options, not as complex as they are today, but learning about the options market. And then one of the guys left Sugden's other desk, the metals desk, and then a guy who's probably one of the best ever traders on the London Metal Exchange, a guy called Chris Adams. He then says to Hugh, right, can I take Paul off of you, because we need somebody to come down the floor again. By this time I'd passed my regulatory exam, so this time I'm allowed to speak to clients, offer advice, trade on behalf of, and so he takes me down there, and so then it's what's known as client liaison. So then I'm client liaison, and then I do that with Chris. I become head clerk. I'm doing client liaison. Again, trading upstairs, nickel market with Jay McDonald. So that was sort of my first foray into the trading sort of side of things, was Jay took me under his wing and we used to trade nickel. And from there, I go and do all that. And then within Sugden again, there's another guy called Ivor Howes. He says to me, I want you to come and work for me. He had a bloke that he was working with, a guy called Mark. I can't remember his last name, but Mark had left. And then Ivor says to me, right, I want you to come and work for me. How much are you earning? I said, this. He goes, right, I'll give you another 10 grand. And I'm like, well, okay, sweet. So that was a desk within Sugden, but we had to pay for our own desk, if that makes sense. Yeah. So you had margins to cover each month. And so then when I get with Ivor, it's not just LME, it's not just metal exchange. This is now metal exchange, this is precious metals, this is currencies, this is oil, this is soft commodities. And that just opened up like this whole raft of other things. But then when you get there and you're looking at it, you're like, right, hold on a minute, this is all just the same. Different markets have slightly different terminology and contract specifications, but it's all exactly the same. Doesn't matter what it is. So for me, in the way that I describe it to people today, it's like it's just one big game. They're all, all markets are understood and traded in the same way by the professional people that trade them. I think one thing that retail traders really don't grasp is, as well, as that these markets didn't open, with the advent of computing power, they'd been going a heck of a long time. The metal exchange itself opened in 1877. All right, so you got to think, well, how does it go from this small market to be the biggest non-ferrous metals market on the planet? All right, and it's not to do with things that retail traders assume this is how markets work and function. And so with that there, it was just like, wow, you can trade anything. It don't matter what it is. It's just you're not limited essentially. So again, that's what I say to people these days. It's like look. Don't just think about, I can only trade currencies or I can only trade this. It's like, look, learn how the markets work, learn how they function, learn things like we just said a minute ago, things like time. Time is non-existent. It's all about price and value. So as I said to you, specific prices, all markets are split up into ranges. So specific prices, that's where you want to be trading from. That's where, investment banks want to be trading from for themselves, for their own speculation. Everything else kind of in between is just commercial business or speculation by other people. But we then sit down, and when I sort of teach people, sit down and go, look, you can do anything. You could run your own little mini hedge fund, because once you understand and once you grasp how this works, how it functions, like rules of the game, essentially, then you can apply that, and it doesn't matter what market you look at because it's literally all the same. And so after leaving Sugden, I had a bit of an argument with Ivor, so left there, and then went on to work for some other brokers like Standard Bank, SocGen, the Natixis commodity markets and stuff like that. Had the financial crisis, and then one morning I just woke up and went, you know what, I'm sick of waiting for trains that don't appear. I'm done with it. And so left. Did some consulting work. That was quite funny. Did some consulting work for a company that had bought another company, but then this little part of it was like a desk and a group of computer programmers, basically. It was for an order routing system from the metal exchange, because this was just now coming into what was known as LME Select. So that's kind of like the electronic side of the London Metal Exchange. So there's this order routing system. And of course, these guys here, these computer guys, they've got no idea what the hell, futures trading is or trading is, And so I go there and I walked into Mitsui Bussan, and so I walk in and they're like, what the fuck are you doing here? And I said, oh, it's nice to see you fellas. Do you know what I mean? Some of them had worked on the floor, some were good mates with dads and stuff like that. And I said, well, I'm here to do this, this routing system. And they were like, thank God. We've been trying to speak to these people for ages and they just don't grasp what on earth we're on about. And I said, right, okay, you tell me what you want and I'll go back and try and translate it as best I can into a language that they'd understand. And so anyway, we ended up doing that for Toyota, Toshido, Mitsubishi, Mitsui, and Triland Metals, which is Dad's old company. Did that, did a bit of metals consulting, totally fell into teaching people. I mean, weird. Going to go and play golf, going to go and play a 4-ball. Two of the boys rung up on the way, they're sharing a car, got a flat tyre, haven't got a spare, haven't got the stuff that you squirt into the tyre. We're sitting at the side of the road waiting for the tow truck. It's like, great. Get a tap on the shoulder from behind. This fellow, he goes, sorry, he says, I wasn't here, Wiggin. We're here, we could make up a 4-ball if you want. It would free up another tea time for somebody else. And we were like, yeah, well, whatever. And so I don't know if you play golf or whatever, but, there's a lot of walking around, a lot of talking. And as blokes do, it's like, what do you do for a living? And I said, well, currency trader or trader. That's what I used to do for a living in the city. And it's, that's all I know how to do now, blah, blah, blah. And the guy says to me, I trade forex. I said, oh, great, yeah. I said, how are you getting on? He said, terrible. I said, terrible. I said, why? It's not that difficult. That's my first foray into retail. Because it wasn't even on my radar. And that's not to be rude to anybody, but like when you're at an investment bank, retail trading, forget it. It's not on the radar. And so we're going around and he goes, I've got my laptop in the boot. He said, if I buy you a beer at the end, he said, could you have a look at what I'm doing and maybe give me a few pointers? And I said, yeah, of course. So anyway, so we finish up, go to the clubhouse. He gets his laptop out. He puts it in front of me and he turns it on. And I was like, what the fuck is that? Right, indicators everywhere. It looked like a drunken spider had been walking across with bloody rainbows on its feet. And I said, what on earth are you doing? And he goes, well, this is what I've been taught. And I was like, right, gives it here. I said, right, delete that. And then did what I would do, just before we started this. I was like, right, look, here's your levels. That's where you want to be trading from. Gave him some background into it. He was like, could you teach me how to do it? And I was like, yes, I suppose. Tell the missus, and she's like, right, make a website, teach people, show people what you know. Get out from underneath my feet, basically. And so, right, so that started, I mean, the website was ultra basic then. It's ultra basic now. I don't do social media. I don't do anything like that. I do podcasts on occasions and sort of try and, I don't know, give something as a different point of view.
Mm-hmm.
But,
Definitely.
you know, but sort of having done it and lived it for the last 30 years, I literally don't know how to do anything else. So it's fun and I enjoy imparting knowledge upon people. Some people listen to what I have to say and fully take it on board. Others dismiss it. Oh, this is just this is just that. And it's like, right, okay, look, I work there. I did it as a day job.
Mm-hmm.
I'd like to think I know my onions.
Yeah.
So that very long-winded answer to your question.
No, it gave us great insights, and I think there's a lot of things we can like really touch on there. One of which is obviously you mentioned your father was a trader, and he actually did he own a firm itself?
No, he didn't own a firm. He started back on the late 60s.
Wow.
On the metal exchange. He randomly got a job, was at a party, and somebody said, oh, well, we've got this opening on this London Metal Exchange. And he was like, what the hell's that? And they went, well, this is what it is.
Yeah.
Would you be interested? And he was like, oh, yeah. Went down there, fell in love with it. But no, he was boss of the desk at Henry Bath, Long Connects, Triland Metals. And then, God, when did he retire? Probably about 2005, 2006.
Wow. It's interesting you mentioned that because obviously it was similar with yourself. He put you into the position, then you sort of went around through different connections and sort of building your name. But would you say it's the same process now, or is it much harder to sort of get your foot in the door now? Let's take a break for a minute there, guys, because I want to tell you about the best prop firm in the entire industry, Alpha Capital. Let's keep it nice and simple. You want to get paid out, you want to have institutional experience behind the firm, you want to have their own broker so that you can trade on the best platform that all traders love to use, and on top of which they have their own technology as well, so you know they're here for the long term. Alpha Capital has no commissions as well as part of their trading conditions, which is absolutely incredible. And not only that, they're London's finest. Now, if you want to join them, 20% off using the code RIZ, and the link is in the description below. Now let's get back to the episode.
Well, it's changed because when he started, it was all public school boys, right? And you'd have, the bosses of the desk. These guys had fought in World War II, do you know what I mean? So you've had brigadiers and colonels and all that kind of stuff. So it was very much old school tie. But then you kind of had this influx from the East End of London who were then starting to creep into the markets. And then the public school boys kind of shied away. It got more aggressive, basically. Do you know what I mean? Whereas they don't really like confrontation, and it was very much, I'll sell you 5, dear boy. Yes, thank you very much, dear boy. All that kind of stuff. Yeah. And it's not what the East End is like. Yeah. So, it was heck of a lot more aggressive. And then, so he lived, and I did, sort of within the real big boom times. All right. Now, you've got to have a degree in this, you've got to have a degree in that, and it's all gone for me American, like totally. You've got to get internships and all this crap. That didn't exist. So my job interviews were in pubs. Do you know what I mean? Literally. I remember the old man telling me he had Morgan Stanley rung him up in the office, and this lady's like going through, look, we want a copper trader with a lot of experience, blah, 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 blah. And he's like, yep, tick this box, tick that box, tick that box, tick that box. And then she goes, so what university did you go to? He goes, University of Life, love. And she went, oh, does that mean you didn't go to university? He's like, no, I didn't go to university. What are you looking for? A very experienced copper trader. Right, that's why you're speaking to me, not because of the school that I went to. And she goes, well, I'm so sorry. You have to have a degree to work at Morgan Stanley. And he just laughed and put the phone down. Yeah. Right. So, yeah, it's very much got a heck of a lot more corporate these days. Yeah. So I'm lucky and privileged to have been there when that sort of stuff didn't matter. Do you know what I mean? It was more of who you were and your understanding and rather than,
What do you think to the industry now? Especially, I know you're not on social media, so
Yeah.
maybe I don't know if you ever get to see what's happening on there or not.
No, not really.
Probably the best. Probably for the best.
Well, this is the thing. People say to me, "Oh, have you seen this person? Have you seen this video?" And I'm like, "No. Why would I? Not be rude, but why would I watch it? It's got zero interest to me. If I've got a contemporary of mine that's gone on and done something, then yeah, I'll watch it with interest because it's like, right, you know what you're talking about because you did the same thing as me. So I'll listen to you. But if I've got, I don't know, a young guy who's like, oh, I've got the latest this, that, and the other, I'm like, mate, where did you work? I know you haven't worked at an investment bank, so you don't know, do you? So for me, it's just like, stop bullshitting. Do you know what I mean? But social media for me is just like, forget it. I've got way better things to do with my time than sort of sit there on social media, personally.
No, definitely. I feel like a lot of us probably should take a little break as well. But it's interesting what you said there, because one thing I would like to maybe ask you is, because a lot of us look at social media, we've probably grown up with social media, right? So it's kind of all we know. So we look at it and we say, this is bad. So for example, like people bullshitting, people selling snake oil, as they say, and making up terminology or concepts or promoting concepts as institutional, and this is how the banks trade, etc.
Yeah.
Has that always been the case though? Were there people even back then who were trying to sell education in that side with using those sort of tactics?
Back when?
So, well, actually, that's another sort of point that we can touch on before that is that how accessible to the average person was trading.
Very, very difficult. I mean, when I started, there was no such thing as retail trading.
Really?
Yeah, no such thing as retail trading. I suppose. Well, I say that there's no such thing as retail trading. I mean, I was in a market that basically, as a retail trader, you'd never be able to trade it because you didn't have enough money. Do you know what I mean? So you have to have, they may have changed now, but it would be like north of $500,000 in an account to be able to have a full, initial and variation margin on the contracts. So people wouldn't have traded that. I mean, I guess trading, you could call it retail trading because I suppose, stocks and shares and stuff like that. But again, not on the radar. Not on the radar. And people that sort of sell courses and stuff like that. I mean, again, this only came into my sort of, consciousness in 2016. I didn't even know it existed.
Really?
Yeah, didn't even know it existed. And I then looked at it and looked into it and I was like, my God, what the hell are these people saying? This is rubbish, And so if I can help one person that watches this and introduces them to what the reality is, then I've done a job. Do you know what I mean? But yeah, I suppose people were doing it, but I couldn't definitely 100% name anybody or say anything.
Was there the use of like leverage back then as well, as high as it is today?
For retail or for institutional? For retail. Again, I couldn't answer. I wouldn't want to sit here and come up with some stupid answer because I don't know. Do you know what I mean? Like I say, it's not on the radar. So when I say it's not on the radar, right, if you looked at the market today, FX market as an example, right, it turns over $7.5 trillion a day. Right, that's a big number. Right, not a lot of people can compute just how big that number is. It's huge. But then I say, right, okay, let's swap out dollars for seconds. How long is 7.5 trillion seconds?
I wouldn't even want to know.
Just a little bit short of 238,000 years in a day. Now you times that by 5 days in a week, and then you do the math. It's enormous, right? So for retail trading, when you're trading £5, £10, £100, £1,000, it makes no difference. You're never going to move the market. You're never going to influence the market in any way, shape or form. So you are insignificant in the game. All right. So it's kind of like I've said to people, you're playing a simulation of the real game. It might look the same. It might, you know what I mean? But it ain't the same game. So yeah, it's leverage. I think leverage has been higher in the past than it is now. Obviously, there were regulations that were brought in to protect retail traders, and I think, you know, in the States, to protect retail traders, you're not allowed to hedge, because apparently mitigating risk is more risky than trading in one direction, apparently. But then America is home with a hedge fund, so go figure that one. I think that people were getting themselves in trouble being over leveraged because they didn't understand what it really meant. Do you know what I mean? And yeah, you know, sort of those things have been tightened up. But that it's not just in the UK, do you know what I mean? They've been tightened up all around the world. So I do think it's a very good thing for beginners. Do you know what I mean? Because, you know, 30-to-1 leverage is just not massive. But yeah, you'd get places that were like 1,000-to-1 or something like that, and that could just absolutely smash people apart. Because again, you know, retail trading is all basically about trading in one direction, right? And you've got to trade in one direction. Like, why? Why are you only trading in one direction? At what point do you think you've got control over what's actually going to happen? You haven't. So again, that's what I say to people, is no hedge. You do realise institutions are hedged all the time, right? We don't make money on price movement. We make money on volatility. We don't give a shit which direction the market goes in at all. All right? We're always hedged. So if you as a retail trader can sort of sit there and grasp the concept of it's okay to lose that to make that, yeah? Because again, it's like market gets to a level, does it go up or does it go down? Well, I don't care. I don't care about direction. All I want it to do is move. Now, if it costs me X to make Y, and then the market shows me in which direction it wants to go in, fantastic. Do I care about direction? No, I do not. If markets go up, markets go down.
What about technical analysis?
Chuck it in the bin. Chuck it in the bin. Right, technical analysis. Technical analysis is basically for analysts at banks. I will admit, I saw one of your podcasts where a guy has said, I will tell you how HSBC trades. And I literally spat my drink out and laughed. Right. I was like, you're just reading reports. That's all you're doing. Have you actually scrolled down to the bottom of your report, and have you seen the bit where it basically says we may have contrary views to the ones that we've expressed, we may have contrary positions to the ones that we're actually talking about, we may have traded ahead before sending you out the report, which is all contains this technical analysis. Reports are not done on what the content is, it's how it looks, right? Technical analysis is used by analysts at banks to paint bullshit stories, to put in reports, to send out to clients. That's what it's there for. That's not how we trade, but that's what that's there for, right? So technical analysis for me, it's like, what are you doing? Go and read the disclaimer at the bottom. That's the bit I'm interested in. So if you've got a report from HSBC, or you've got a report from Goldman, or you've got a report from Sugden, go and have a look at the small print. It tells you explicitly, we could very well have used this for our own purposes. Our own purposes, what does that mean? That's quite all-encompassing, isn't it? Could it be that I've traded ahead, and then I've sent a report out, and in the report it says, well, if we get to this level here, you know what, we think the momentum should take it higher. Am I planting a seed in your mind? Yeah? So the market I bought here, the market gets up to that level, and then people go, oh, I remember that report. Oh, they reckon the momentum might take it higher. I tell you what, I'm going to start buying. Thank you. You've just helped me close out my position. Now, if it goes up, happy days, you make money. If it doesn't go down, tough shit. You're a big boy, you know the rules. So technical analysis for me is a waste of time. Waste of time. Because you're not going to predict future price movements. You don't know where the market's going to move from ahead of the time.
Is that the case across the board in terms of, like, no one on that level, you know, in terms of the institutional side, they're not looking to predict price movements? They're just, as you mentioned already, they're just looking for volatility. And through hedging, they're happy to take a loss here, but to take a win on this side. Obviously, that covers that loss.
Yeah, that's how hedge funds operate. Right? That's how hedge funds operate. So if you looked at it and you said, right, do I know where the market will move from ahead of the time? Yes. Why do I know that? Right? I know the rules of the game. There are going to be specific places where the market will move from. Now, once you know where they are, again, A, you know where the market's going to move on in the future, but B, you can go back, like I showed you before, right? You go back, and it's a very, very quick explanation to you. But you can go back and you can go, well, wait a minute, the market's moved from here in 2020, 2018, 2015, 2013, and then I can go back to the 2000s, and then I can go back to the 90s, and then I can go back to the 80s, and the market keeps moving from the same places. So where's it going to move from in the future? Same place it's moved from in the past. So then what then comes into it is you then look at it and you go, right, this thing at the bottom of your chart is called time. It doesn't exist. I'm not interested in time. Right? What I'm interested in is, right, from this level here, this level here, this level here, this level here. I do a chart, I analyse it, let's just say a currency chart, as we did the euro before, sat down, I'd never have to touch that chart again unless it goes and makes a new high. It won't make a new low because the things that came before it, which is where the euro gets its trading levels from, has actually been lower already. All right? So unless the euro goes and makes a brand new high, which it ain't going to do anytime soon, I do a chart, I analyse it once, and that's it. Never touch it again. Don't need to. And if you could use technical analysis, where's the market going to move from? God knows. Because I don't know where the move originally started from. I'm guessing. I'm looking at ridiculously short time frames. I'm getting a completely different perspective and view of the market. I'm fighting against commercial business on a daily basis. I don't understand as a retail trader there are two sides to the trading story. You've got commercial business. So on a daily basis, what's happening in the foreign exchange market? Well, we're not bloody trading all the time for ourselves, jobbing in and out, stuff like that. We're facilitating clients' order flow. That's what we're doing. So 95% of your time is taken up doing that. The other 5% is, right, well, I'm taking a position from there and I want to take it down to here and yada, yada. But if you're fighting against people or trying to trade against people, right, that have to trade, they have to. No, they don't want to. It's not a want, like, I want to speculate from here. I have to trade. I've got wages to pay. I've got bills to pay. I've got invoices to pay. I've got all this kind of stuff. So you ring up an investment bank and they go, right, well, I need to buy 20 million euros. Okay, there you go. You can do it at this price. Right, done. Boom. All right. How are you supposed to predict that? I said this in an interview quite a few years ago now, but I'm sitting at my desk, phone rings. I pick the phone up. What's the only thing I know that the other person at the end of the phone is going to say to me? The one thing I can predict is hello. After that, I don't know what he's going to say. Could be buy, could be sell. Do you want to go out for a beer? Do you want to go out for lunch or something like that? I don't know what this person's going to say. So if you're trying to tell me that you can preempt what he's going to tell me to do before he does it, forget it. Yeah?
Because the assumption is that the market is built up of buying and selling pressure. While there's a narrative that's going on at the moment in the retail space of like the market is predictable using an algorithm, and therefore we break down the algorithm into technical analysis, right? Different aspects of technical analysis, and that's why people are getting quite confident in their analysis and getting quite maybe overly confident to the point where they start to predict the markets. So it's interesting when you talk about commercial side of things, because you're talking about wages, etc. Can you break that down a bit further? Like what would these companies be doing in terms of they're paying for wages, etc. And does that then incorporate into the 7 trillion that's being in terms of volume going through forex?
So if you imagine a big company like Coca-Cola, right? It's got subsidiaries all around the planet. Yeah, and let's just imagine it pays everybody on the same day in the month. But you're an American company, dollars. We're British. I don't want to get paid in dollars. All right. you're in Australia, you don't want to be paid in US dollars. You want to be paid in your own local currency, right? So if you can imagine a company like Coca-Cola, basically would say, right, I need to sell this amount of dollars, and I need to buy Aussie dollars, I need to buy pounds, I need to buy euros, etc., in order to then go, and that money then goes out of their accounts and it goes to pay all of the subsidiaries around the world of Coca-Cola. If you had an importing business, right, as an example, so British company importing marble from Italy, yeah, because make work surfaces and stuff like that, right? So the company in the UK gets in touch with the company in Italy, and they say, right, I want to buy X amount of marble. Good lad. X amount of marble, and the company in Italy says, right, yeah, that's going to be 2.25 million euros. Okay, so what does the company in the UK have to do? Sell the pound and buy the equivalent of 2.25 million euros. They then send them an invoice. They then pay that invoice. So all of this is going on all the time, right? Yes, there is speculation going on, but not all the time. Do you know what I mean? So if the mainstay of every single day is just commercial business, good luck. Do you know what I mean? It's that is very unpredictable. Do you know what I mean? Because, like I say, if I don't know what he's going to tell me to do, how can you know what he's going to tell me to do before he even bloody rings me up and tells me what to do? It's an impossibility, right?
Yeah, well, it's so interesting you say that, because there's an example, and I don't know, there's two books that it could be from, but it's the same author. It's either Trading in the Zone or The Disciplined Trader by the same author. And there's a story he tells where basically there's an analyst, and he's saying, great analyst, technical analyst, and he's saying to this investor or this individual who has a seat on the floor, essentially, he's like, look at my technical analysis. Look, we're about to hit this floor, this key level, this support, and therefore we should bounce and buy from here. And then within the story that's in the book, the guy goes, oh, really? Okay. Then he makes a call, does a massive sell order, and the price just completely drops. And he goes, that's what I think about your technical analysis. It's like, you don't know what's going to happen. You don't know what orders will get filled. Exactly kind of what you're pointing at there. Yeah. And it's so interesting, though, because it's like the opposite of what we on the social media front in the retail side, especially nowadays, it's like the complete opposite of what we're hearing. It's like, here's a strategy that you can learn that can really give you. No one really has gone as egotistical to say this is 100% certain and this gives you certainty within the market, but this is, you'll be able to predict the market on a very high strike rate basis, essentially. So it's so interesting to be able to hear, especially because a lot of people are highlighting strategies as institutional strategies. This is how the banks trade, etc. So to hear someone who has 30 years of experience discuss more detail and depth of the markets is incredible. And one thing you have touched on a few times, and like you said before we started, you showed me what you were going to be talking about in terms of the levels and how to actually look at price. Could we break that down? I know obviously we don't have the chart for everyone, but could we break that down in terms of what we did there? In terms, we looked at the euro, and I know a lot of people trade the euro in the audience as well. So you looked at the euro, and you actually went on to the chart that I had up originally was forex.com chart. We moved over to ICE on TradingView, and the reason for that is because it actually gives all the data that's available. And maybe you can take it from there. Like, why did we go so far back in time? So we went back to the 80s, I think. I think it even went to the 70s.
Yeah, went back to the 70s. So if you looked at the euro.
Let's take a break for a minute there, guys, because I want to tell you about the best trading tool on the market, TradeZella. The reason why TradeZella is the #1 trading tool that every trader needs is because you can do backtesting, automated journaling, trade replay, in-depth analytics, and so much more. And the greatest part about TradeZella is that it's all automated. All you have to do is connect your MT4 and MT5. It will pull all your data onto the dashboard. You can add playbooks. You can just add notes. You can add images from your trades, and you can get the insights that is necessary for you to progress as a trader. Now, TradeZella is for absolutely everyone. Whether you're a crypto trader, whether you're a forex trader, whether you trade prop firms, it is for absolutely everyone. And that is why thousands of traders have signed up using my link here through the podcast. Make sure you use the code RIZ10 for 10% off your monthly subscription, or WOR for 20% off your yearly subscription. The link is in the description below. And let's get back to the episode.
Jan 1st, 1999. That's when the euro comes into being, right? So prior to that, some people, depends on how old you are, you might not even know what these are, right? But you had German marks, Italian lira, Spanish pesetas, etc., right? So they were all their own individual currencies. Prior to the euro coming into being, that was what you would trade. Jan 1st, 1999, you can't trade them anymore. This is the euro. Right, okay. So where do you get your trading levels from on the euro? If you tick over from all of these individual ones to one collective, and say, like I said to you, you go home on Friday, that's the last day you can trade those, come in on Monday, this is what it's going to be. So how on earth as institutions would you have any idea or inkling about where you want to be speculating from if you had nothing to compare it to? It would be a free-for-all. Never going to happen. Ever. Right. So what came before the euro? So there were two things. One's a European unit of account. The other one is the European currency unit. What were they? They were the precursors to the euro, and they were made up of various member country currencies within the euro.
It's like an average.
Yeah, yes, but it's like a weighted average.
Yeah.
Right. And so the European currency unit was established in March of 1979. It took over from the European unit of account, right? So when that's being traded, the levels at which speculation is occurring from institutions are also being laid down. So then what you have is business continuity, right? So you go, right, we've got all these levels established here. What are we going to do Monday? Well, we just take all those levels there and we just copy paste over there. That's all we do, right? So you've got business continuity, so you know exactly where you should be trading from. And so then when you look at that and you go, okay, well, that's interesting. That can be traced all the way back, like I say, to the inception of free and flowing currency rates back in 71. And then you go, that thing at the bottom, that time. So like I said to you, right when the euro, right where it is now, when was that first traded as a price? Go on.
We looked back, it was 78, was it?
78,
Yeah.
the year I was born. So then that poses a question, doesn't it? Well, okay, so it goes all the way back that far. How can the value of the euro be the same now as it was then? That's an impossibility, isn't it? Because if you looked at that through the lens of real money, what's the value of money in 1978 to 2024? It's ridiculous. It's so not the same. So if you then said, right, well, that doesn't make any sense whatsoever, how am I supposed to understand that as a normal person? How am I supposed to understand that? Well, if I was to say to you it was just a big game, right, and there are rules to the game, one of the rules of the game is that time doesn't exist. It's of no consequence. The markets are going to keep moving from the same places over and over again, and it doesn't matter where you are in the space-time continuum. That makes no difference whatsoever. Do I know where the euro is going to move from in 10 years' time? Yes. How do I know that? Because it's moved from the same places since 1971. And so you then say, well, if you were at a bank and you walk in and they go, right, Riz, sit down, my old mate. Here's a $10 million account. It's all about technical analysis. Go and work it out for yourself. Not going to happen. If you walked in and they said, right, Riz, $10 million account, sit you down. It's all about fundamentals. And you go, okay. And then just as they're leaving, they go, oh, by the way, no two fundamental events are ever going to be the same. So the market will never react in the same way. Go and work it out for yourself. Not going to happen. How do you pass down knowledge from one generation to the next? You set of rules. How does this work? All right. So one of those big things is time is of no consequence. It is all about price and value. Now, when you know where those prices are, again, you'll just use them forever. But when you know where these prices are, what you're then doing as an institution is when we get there, what is its current value? Do I want to maintain the same value as when it was there last time, or have I changed my mind? Do I think it's now overvalued? I want to sell. Do I think it's undervalued? I want to buy. And I'll make that decision when it gets there. I'm not going to make it prior. I'll make it when it gets there. And so then, because you know where that market's going to move from, right, in the retail side of things, right, which direction is it going to go in? Oh, I don't know. I reckon it's going to go down. All right. Take your ego, pick it up, put it over there. Don't ever trade with your ego. Don't say this is going to happen because I think. Hedge. Let the market tell you where it's going to go. See, now that's quite sensible. Because if you understood that you had no bearing on how the game is played, you don't. Do you know what I mean? Like we said, 7.5 trillion.
Is there any example in terms of the hedging? Let's say for a euro.
It's just easy. But right. So how I teach people is, right, here's the level. Here's your stops either side. Okay, basically create a window around the level, and hopefully the market's going to come. Let's say the market's coming down, comes down to this level. Now it can do one of two things. It can either bounce, or it goes through the level. Now, at what point can I influence how that works? I can't. So you have to be very open to the fact that you're not in control. You never will be in control, right? So level, stop, stop. Right, market comes down. Which one are you going to do? Don't care which one you do. Right? Because that has no bearing. I don't make money by caring which direction the market goes in. I make money because it moves, right? So then what I do is, market comes down. Let's say that it doesn't bounce, it goes through. So I have a fixed stop here and a fixed stop here. I've got take profit targets here and here. And I go, right, okay, market comes down, goes through my level, my buy trade gets stopped out. My sell trade then continues down. Now, take profit targets are targets. You don't always hit your targets. You've got to, trade manage as well. I mean, don't be a micromanager. You've got to let things flow, right? So then what happens is, let's just say for argument's sake, it hits its take profit target. I go, right, I've got a negative number here, I've got a positive number here, and what have I got at the end? That's my profit, right? And so if you were to hedge and be open sometimes to losing on both sides of that trade, that's okay. It's called, the embracement of risk. If I don't risk, I can't make. Yeah. So there I say, right, so the volatility that comes into that market is that institutions, the consensus was that price at this point in time is actually overvalued, so we want to sell. So the volatility comes to the sell side. Right, I don't mind losing there to find that out. Yeah, so if you treat your trading like a business and understood that businesses have costs, you go, right, if it cost me that to find out I can make that, mate, I'll do that deal every day of the bloody week.
So it's like adding in another layer of, working out your profit and loss. So in terms of, rather than just looking at winners and losers, you're now looking at, okay, I wouldn't lose on the same position or hedged position.
Yep.
So now what's my profit or loss after that fact?
After they've both been closed, yeah.
In terms of the overvalued and undervalued aspect, is there anything in particular that an institution or yourself, when you're in these positions, would look at to justify this being overvalued or undervalued? Is there anything, because you mentioned fundamentals, for example, and you're right in terms of there's no prediction of any two fundamentals being the same, right? But is it still helpful? Is it still useful? Is it still something that you keep an eye on, or is it something that, again, is of no consequence?
No, I mean, you keep an eye on fundamentals, do you know what I mean? So you keep an eye on sort of central bank releases and stuff like that. I mean, that's amazing because, again, that's to do with real money and not to do with currency value or currency pairs, But you keep an eye on it. You don't want to be caught unawares by something. Do you know what I mean?
Yeah.
So you keep up with the current affairs. Yes, that's where you get your current valuation from, right? But again, on the retail side of things, because you're not making those decisions about what is undervalued, overvalued, don't worry about it. Yeah. Keep yourself abreast of the situation, yes, but you've got no influence over it. Do you know what I mean? So what I say to people is you are probably giving too much energy into stuff that you can't control, and pick it up, take it away. Do you know what I mean? Just be left with the pureness of, right, level, hedge, move. That's it. Level, hedge, move. Could you do that from the same place again and again and again and again and again? It's very monotonous. It's very boring. Right? It's not exciting. It shouldn't be exciting. I think a lot of people that I speak to, especially the younger people, they're like, oh, I'm in this Discord group and we're doing this and we're doing that. And I'm like, right, why are you in a Discord group? Well, because, you know, everyone's buzzing around all these trading ideas and I'm in this trading and stuff like that. I'm like, right, why are you trading? You're trading to be part of the group. You're trading because you want other people to go, yeah, that's a good idea, that's a bad idea, because you actually care about other people's opinions. Social media. Everybody cares about what everybody else says. Yeah, I couldn't give two shits at all. I don't care about any of that. All right? Stop worrying about what other people think and say and do, and just switch it all off and go, right, the pureness of, there's a chart, there's a market. What's it doing? I don't need this. Fundamental side of things, yes, do keep abreast of stuff. Be interested. If you ain't interested, don't trade. Do you know what I mean? And I'm not saying put thousands and thousands of hours into screen time either. You don't need to do that. Once you understand, look, all these markets are just split up into ranges. Just trade ranges. Be patient. Be disciplined. Problem with today's society is everybody wants to get rich yesterday. Yeah?
Yeah.
Forget it. I mean, come on, be realistic.
In terms of that, I was actually going to lead into some of my next questions in terms of, one, timeframes and style. So like position, swing trading, scalping, day trading, etc.
It's all trading.
It's all trading.
It's just trading.
That's, that's very true. In terms of that, though, was there any times where you would look at scalping, like a very quick position, versus obviously, you know, with the ranges from what we looked at, it was on a much higher time frame. We're talking potentially holding positions for weeks, months.
This is the thing. So as an institutional guy, right, what's short-term trading for me?
That's true.
2 weeks to 2 months. That's short-term. Right. Say that to a retail trader.
That's position.
Right? I'm crapping myself after 2 hours. Yeah. Or 10 minutes or something like that. So what's a quick in and out for me? 2 days? Do you know what I mean? It's an entirely different concept. Do you know what I mean? Would you sit there and have a client ring you up, right, and he goes, right, how can I buy, I don't know, 50 lots of copper? And you go, 2,000. And he goes, yep, done. Then, on the screen, it goes, let's just say now the offer is 1,995. Yeah, for 50 lots. Right, I'm short 50 at 2,000. I can go and buy them back at 95. That sort of stuff, yeah. Because if I don't want to have a short position at 2,000, right, I need to go and cover it. Now, sometimes I can go and nick a few dollars here and there. Now, of course, that then all adds up to the P&L at the end of the year and stuff like that. But, yeah, mate, 2 weeks to 2 months, that's short term. Because you're looking at it again through a different lens. You're understanding, right, okay, if we're in this range, we're going to touch both the top and the bottom of this range. Now, I know that in advance. Yeah? I would say that happens 80% of the time. Sometimes it doesn't quite make it all the way to the bottom or all the way to the top.
In terms of your time, though, as you mentioned, like removing time from equations, so you know it's going to go there, you just don't know when.
Yeah.
But you're not bothered about when.
No. I just know that it will happen. Why do I know it will happen? Because that's what's always happened. So I don't need to worry about it. I just know that it's going. Do you know what I mean? It will eventually get there. Which could be 2 days, 4 days, 7 days, 10 days, 2 weeks, 2 months. Could be anywhere within there. But again, I would much rather put my money on the table once and let a market do what it's always done, rather than be trying in and out, in and out, in and out, in and out, in and out. I need to sit in front of my screen way more than I would ever want to. This way, it's like, right, put it on, and people go, oh, it's called set and forget. It's not set and forget, it's set and keep a bleeding eye on it. Do you know what I mean? But I know in advance that's how this works. Do you know what I mean? That's how this game works. Mm-hmm. So if I know the rules of the game, why would I change the rules of the game when they haven't changed?
Is there any other rules that we haven't highlighted at all?
Yeah, there's a few rules to the game. You know, time not existing. Specific prices on currencies. Can you teach that on different, asset classes? Yes, of course. I mean, I sit down with people and I go, right, okay, bring up TradingView, right? And I go, right, US stocks. Pick me a stock. Pick me a stock. Pick me a company I've never heard of, right? And I go, all right, that one. Click. And you mark it up. So once you understand how you mark a chart up, and once you understand what a chart is, like what actually really is it? It's a graphical representation of human behaviour over a time. However long you look at that chart for, right? That's what it is. Human beings making decisions. Okay. So you go through, you mark the chart up, and then you say to yourself, right, who's on the board? Don't know. Okay, who's number 2 in charge? Don't know. What products do they make? No idea. What's their profit forecast? Don't know. What have they got coming in the future? Don't know. Do I care? No. Can I trade it? Yes. Why? Because that's where ranges are. All right? This is how this market's been split up. This is how institutional people are making decisions on value. We get here, this is its previous all-time high. What happens? Market comes up and it surpasses that and it closes above that. Then what's it do? Then it comes back and it goes, hello, are we still cheap here? Yes. Okay, up we go again. How could I trade that? Well, I knew that previous high there, the decision was to take the market down. It's overvalued. Then we got back there again and I go, right, well, I can hedge from here. Why? Because I know that there's a decision that has to be made. Either A, we go up, or we go down. And I could sit there and mark up any chart on the planet, doesn't matter what it is, and sit there and go, right, I could trade that. What do I need to work out? Where's my stops? Right? Where's my stop losses? Where's my take profit targets? That I need to work out. But I could sit there and do a chart.
When you come to those moments, what are the contributing factors to sort of say, okay, this is where acceptable stop loss would be, or this is where I'd look to take profit? Is it the same ranges or is it something else?
No, I'd basically look at the chart and say to myself, right, okay, so how far past does it go past this level before it stops and comes back round again, right? So then I can kind of sit there and go, right, well, that looks like a sensible place to be putting my stops here. Right, and then that would be different on every single chart that you do. So again, you have to put that work in. You have to go through, have a look, sensible places, and then just sit there and go, right, what is my decision? Why am I taking this trade? Because it's at a level. What's happening right now? Not really bothered. Where's the market going to go? Don't care. It's like when I say it to people, that's ridiculously simple. Yes. Why does trading have to be difficult? Think about it. That's the fundamental question. Why does trading have to be difficult? Why would an investment bank employ you as a trader to make money, but make it very difficult for you to do the job that they've employed you to do in the first place? In what business would that make any sense? Right? So if you have a framework to work with and you understand how that looks, you understand how the market moves, you understand all that, you can take that and you can teach that to somebody else. Like I said, fundamentals, they're constantly changing. In a world that's constantly changing. Technical analysis, again, I go back to, that's just for an analyst. Right, literally. I mean, I remember the first analyst I ever met was when I was a credit liaison, so it's between 94 to 98. I think probably around about 96, 97, something like that. A lovely guy called Maksud Ahmed. And he came in and he sat down on the desk and we were like, hello, who are you? And he goes, I'm Max. What are you doing? He goes, I'm an analyst. And we were all like, what the hell's one of them? Right? And he goes, well, I'm to sit here and pore over reports from, companies like Codelco, massive mining company in Chile, and basically make predictions and write a load of blurb on where I see the price of copper being in the next 5 years. And we went, piss off. You don't even know where it's going to be in the next 5 minutes, let alone the next 5 years, right? And he starts laughing and he goes, yeah, I know, right? I know that, but this is my job. This is what they've employed me to do. So, yeah, I would just always just say, it's a game. Learn the rules of the game. Then you can play the game by the correct set of rules. I mean, it's just a stupid analogy, but if you buy a board game, right, the first thing you do is what?
Read the rules.
Read the bloody rules so you know what you're doing, right? But then they're laid down, they're out in front of you. Are institutions going to come out and tell everybody how we trade? No. Why would you do that? There's a few reasons. One of them is you've been using your customers to make a lot of money, right? So, but then you're not going to come out and tell everybody what you're doing. Because as institutions, it's about liquidity generation. How do you generate liquidity? You do the opposite of what you're telling everybody that you're doing.
But off the back of that, like you mentioned that retail really is small game, small fish,
Tiny.
It's tiny, exactly. Yeah. So where does that come in if you're making the money off doing the opposite of what you're telling your clients you're doing or telling people that you're doing? Where does it come in? Where's that beneficial then if they're so small? Or is it the case?
I'm not talking about retail.
You're talking. This is what I was about to say.
I'm talking about institution.
So it's like other institutions.
And institutional clients. Right? So put it this way. If I teach all of my clients to do exactly the same thing as me, when I want to buy, so do they. Who am I going to buy from? If I want to sell, so do they. Who am I going to sell to? In that scenario, I starve myself of liquidity. I don't want to starve myself of liquidity. So, again, it comes down to reports and stuff like that. If you've traded ahead, then you send a report out. Right, I could generate liquidity there, couldn't I? Right? Because especially if you're somebody like Goldman, right? They go, oh God, it's Goldman Sachs. I'm going to do it because it's Goldman. Goldman don't give two shits where the market goes. All they want is to generate liquidity. So you buy at wholesale, you sell at retail. You sell at retail, you buy at wholesale. That's what you're doing. That's how markets work. Very, very simple. It's always worked like that. Like I said, Metal Exchange opens in 1877. How the hell does it go on to become this, the world's biggest non-ferrous metals market? I buy at wholesale and I sell at retail. I mean, if you just come into it, I can sell at retail and buy at wholesale. Right, brilliant. That's it. It's that freaking simple.
In terms of metals, we had an all-time high on gold recently. What happens in those scenarios once where, range-wise, it's possible because we have the past price action. Once we're hitting all-time highs, where do the mindsets go? Like, what is the mindset once we're in those all-time high territories?
For retail or for institution?
Institution. Retail, I know what they're doing. They're trying to get reversals. They're trying, just trying to do anything.
Well, let's keep going until we find some liquidity. Who wants to sell? Do you know what I mean? Who wants to sell? And when you find that, then you go, right, that's my ceiling there. Right, come back down again. I'll tell you a funny one on gold. Right, so you've got, let's say, a high of 1917 back in the financial crisis, right? So you go there. And you have a look, and you go across and look at the right-hand side of the chart. We then come to gold's approaching 2000. Goldman, JP, it's going to the moon through 2000. Really? Yes. Honest. Honestly, it's going to right. We've already bought around about 1750. We're telling you, gold through 2000, it goes to the moon. And there's liquidity generation. Goldman said it, right? Jesus, it must happen. Gets to 2000, what happens? Up, out of my position. Thank you very much. Down again. Then you come back a couple of years later, and it's like gold through 2000. It goes to the moon. That's what you said last time. Mm-hmm. Yeah, but it definitely happens this time. You sure? Mm-hmm. Up. Straight back down again. Right. Gets there again. Gold through 2000. It goes to the moon. Yeah, but that's what you said the last couple of times. We don't believe you. Silly bastards. Now it goes to the moon because now we want it to go to the moon. Mm-hmm. Right? So, but where's your ceiling? You'll let the market show you that. Do you know what I mean? You let the market show you that. And then, again, you come back down and you come back to levels that you've been at previously. Mm-hmm. And then you go, right, okay, that again, I can see this is where I want to be trading from. So if a market does make a new high, you can never pick a top. Mm-hmm. Or if it makes a new low, you can never pick a bottom. Or you can say zero, but you know what I mean? Mm-hmm. But you can never pick a bottom either. So you have to just as a trader, you have to let the market show you, mm-hmm. right, where this new ceiling is or where this new bottom is before you can then step in. Mm-hmm. You could go back to the previous high or the previous low and say, right, there was clearly a conscious decision here, A higher, B lower. Mm-hmm. That I could trade because then I know, right, okay, so people are going to be sort of looking at this and going, right, speculation is going to occur. Again, hedging. It's like, right, well, I don't care if you take it back up again or I don't care if you take it down again. But I know that something will happen from here because it's already happened. Does that make sense?
Yeah, it does. That's so interesting. Because I was about to say, actually, and then I realized it was within your explanation there already of like, oh, maybe we should look out for these articles then and then do the opposite. But then, as you said, you listen to the first time, you do the opposite. The second time, you do the opposite. Third time, you do the opposite and it goes. Yeah. So that's not always the best route to go either.
No. Which is why I say, mm-hmm. if you read reports, mm-hmm. just read them, don't act on them. Yeah. Do you know what I mean?
It's so interesting because when I went to the stock exchange in New York in November last year.
Yeah.
And I went there. Obviously, it's very different to what it used to be.
Yeah.
You know, and now it's and this is the interesting thing. Like now it's just like kind of TV sets. You know, literally the whole place is just scattered with probably about 10 TV sets for CNBC and so on and so forth, where they do these. These predictions, talk about the markets. Talking of which, in terms of like all-time highs, etc., is cryptocurrency no different, right? I know obviously it's more of a relatively new thing, but it seems to be following a very similar concept when we see these articles of like when it's at the highs, it's like it's going to keep going, and then it ends up reversing, and similar time this round.
Cryptos is not sort of something that I've really look at. Call me an old dinosaur or whatever, but it ain't regulated, so I'm not interested. But then again, come boil it down to human beings. Mm-hmm. Okay, so what were you told by your mum and dad when you were young? Right, Mum, can I have that? No. Why? It's too expensive. Right, okay, so that gets ingrained into your brain. Then, Mum, can I have that? Yes. Well, that wasn't expensive. That was cheap. Right? And so you get to learn these values, and it's ingrained in your brain ever since you were a child. So when you go and look at chart, doesn't matter which one it is, when you go and look at a chart, just think of in your mind, cheap, expensive, cheap, expensive, cheap, expensive. Don't listen, like I say, don't read reports, just leave them alone. They're only there because people like to express opinions and people like to go, oh, well, he's got the same opinion as me, so then therefore I'm really, really clever and this should happen. No. Stop listening to other people and use your own bloody common sense. Do you know what I mean? So if it's at its all-time high, it goes to the moon. Well, you're an analyst. You ain't a trader. Yeah? What's an analyst paid to do? To get things wrong on purpose. Yeah? To get things wrong on purpose. Why? Generate liquidity. Yeah. Okay. Well, that's a bit of a fucked up job. Right? But to get things wrong, how many times do analysts get things wrong? A lot.
I can imagine.
A lot. Right. So do you want to be an analyst or do you want to be a trader? That's a good question. Cryptos.
You mentioned with that in terms of like not being regulated. Why is that important to you? Why is it, if it's not regulated, you're not really bothered?
Well, because if you have a dispute with an institution, you've got a body that you can go to and go, right, I have a dispute with this company, and you can go down all the legal routes and stuff like that, right? Because you've got backup from like the FCA or whatever, right? So you've got somebody there in your corner, especially as a retail trader, and you can go, well, this company screwed me over, and they did this, and this is not the first instance in this which has happened, and I found another group of people, and this is right. You've got a regulatory body you can go to there. If you go to the regulatory body and go, I lost all my money in crypto, they go, nothing we can do. Sorry. So for me, because I come from a regulated environment, again, that's always in the back of my mind. Always in the back of my mind. And I have people saying to me, should I invest in crypto? I go, just be aware. You could lose all your money, right? And you've got nobody that you can go and have any recourse with. So, yeah, like I say, I could be an old dinosaur. I don't care. But I wouldn't touch it because it's not regulated. And that does, for me, make a difference. I suppose it's because of the world in which I come from.
No, definitely. No, it makes sense. And it's something to be very aware of, because like when we talk about trading anyway, in terms of risk, we talk about make sure you risk what you can afford to lose.
Yeah.
And it's like just making sure you have your risk appetite and understand the risk you're taking, because most people probably won't understand what it means to not be regulated or be regulated, and they won't understand the fact that if you can lose everything, which you can, that there isn't anything there to protect you versus in a regulated environment. So there's the pros and cons, but most people just don't take the time to research or understand it in the first place. So not only are you risking money that you can't afford to lose potentially, which most people are doing, unfortunately, but then they're risking it into something where they have no protection either on top of it. Yeah. So it's just the ultimate risk, if you will. Yeah. In terms of capital there, what are your thoughts in terms of capital? Like how should traders capitalize themselves on more the retail side for this side of things? Right now, there's a big boom over the last couple of years in terms of prop firms, which is interesting because you brought something up earlier where in terms of it being a game, right? And the retail side sort of doesn't really count. It's like it's fake money. It's not even like real in the sense, on the grand scheme of things. Yeah. Well, these prop firms, I don't know if you've heard of them or not, but they essentially use demo funds. It's demo accounts. The whole thing is built on demo accounts, and it's people do a phase 1, do a phase 2, get a certain percentage return, etc. Then you get funded, still demo though. Then you get paid out based on your performance thereafter. That's the current really hyped up sort of route that a lot of traders are taking in terms of to get capital, or to at least leverage to start getting their own capital. What are your thoughts in terms of how traders should be capitalizing themselves? And what would you say as well in terms of like becoming a full-time trader, so meaning that they're making ample enough income from trading to be able to live their life themselves? What sort of capital do you think a trader needs to get to that point?
That's a good question. I mean, I suppose it's what's your monthly outgoings, what's your costs, and you know what I mean, all stuff like that. And I would suggest if you had a job and then you jacked it in because you were making the same money or a bit more, that's freedom, right? That's freedom. Prop trading, it's not prop trading.
Because there's the real props, the original props, right? And then there's what we have now,
which was clamped down on, like a ton after the financial crisis, because basically that was just like, right, here's the pot, risk department, fuck off. Our job's to make money. Just don't even bother coming over. Do you know what I mean? We're here to make money. We take as much risk as we bloody want. Quite what that's got to do with prop firms, as in, FX or whatever. For me, I mean, again, it's like if I've got to pay to get a demo account, I mean, straight away, that's smelly, right? So I'm trading on a demo account. You've got my money, and you've got thousands and thousands of other people's money. Again, walk into that, understanding. You log on to a broker, and it comes up, and it says 79% of people that trade with this broker lose money. Right. That's, again, massive giveaway. Why do they lose money? Oh, should we go and have a look at the educational section on this broker's website? Like, he's going to teach you how to take his money. Yeah?
Yeah.
Right. So all these firms know, basically, that the people that are trading have no real education. They don't understand how the game. They just literally don't understand it, or they've been taught to do all these stupid things and they don't work. So I mean, again, for me, that's just like, it's just ripping people off. Do you know what I mean? It's just ripping people off. I mean, I last night, just for shits and giggles, right, I watched The Big Short again.
Yeah.
Right. So Mark Bowen, that character. Now, I sat there last night with the missus and I was like, do I go on ranting like Mark Bowen? She's like, no. No.
She's trying to hold you back.
Yeah, right. And I'm like, but why? And she's like, no. He said, because people will just think that you're, you know, this loud, arrogant, you know, person that's telling everybody they're doing everything wrong. And I'm like, yeah, I know. I don't want to be that shouty. And she's like, no. Just take your time, breathe, listen to Riz, answer the bloody questions. Don't go on a crusade. But the thing for me is, it's like the whole retail trading industry is built on bullshit. And so if you've got a whole industry that's built on bullshit, it's like prop firms. That ain't a prop firm to me. Do you know what I mean? To everyone else, oh, that's a prop firm. I've got to pay money to do a challenge, and I've got to do this, and I've got to do that, and then there's all these rules and all these restrictions and all stuff like that. Can you use them to get funded? I don't know. Yeah, I don't know. I suppose you could. If you're going to trade with your own capital, again, it just comes down to, right, well, just think to yourself, as a trader, right, when I embrace risk, what am I looking at? I'm not looking at how much money I can make. I'm looking at how much money I could potentially lose in order to give me an opportunity to make money. So what would I risk? You've already hit the nail on the head. Only risk what you can afford. Do you know what I mean? However much that is, if you've got £1,000 in the account or £100,000 in an account, do you know what I mean? If you can afford to lose 100 grand, fine. If you can afford to lose £1,000, fine. But I mean, again, it's just understanding your aspirations. If you think that you're going to be able to earn enough money to sustainably support you and your family off a £1,000 account, you're delusional. Do you know what I mean? You know, you have to build things and build things and build things. But it's like, if you're privileged enough to have 100 grand in an account, and again, you still got to have a good education, otherwise you're just going to bloody blow the lot. Do you know what I mean? So,
in terms of percentages, though, because it's off the back of that, like a lot of people over the recent years, they're as retail traders, it's a bit interesting to get your perspective, to be fair, because obviously, as an institution, you're handling much larger capital. Even institutional clients, probably much larger capital. So percentages probably decrease in terms of what the sort of targets are or what's deemed as good. Versus a retail trader, because the capital is much less, the percentage returns could be higher, but it's obviously on much smaller capital. So in terms of in reflection, it's still much lower than what the institutions are doing, of course. What is your sort of thought process of like what is an acceptable return or an average return that a trader should be looking at or should be looking to return, or is it not something that is focused on?
No, your job's to make as much money as possible. You have risk parameters that you can use, right? So the risk department will say, you know, you don't go over this position limit or whatever. I mean, I remember a guy I used to work with, Neil Potter, and the previous company he worked at was a company called AMT, so Amalgamated Metal Trading, and his boss there, he tells the story when he came to Sugden. His boss there comes. He said, Neil. I said, yes. He goes, position limits. He goes, yeah. He goes, you're either maximum long or maximum short. He goes, they're banisters. They're not targets. Right? Yeah. And so, I mean, I would say 50% a year on average is quite easily achievable. I would say it comes down to how many asset classes am I looking at? You know, how often am I trading? Do you know what I mean? It's a very difficult one to answer.
If I was to give you like average retail person who just taking sort of what I've seen, most of the retail traders I come across, not to say all of them are like this, of course, but the ones I've come across, they're trading pretty much every day, and they're trading normally just one asset class in the sense of they might be trading forex, but maybe at maximum 2 or 3 pairs of forex. They might be trading futures, but again, just maybe normally when it's futures, maybe again maximum 2 or 3 instruments within futures. And that's the average person I'm seeing. They're trading Monday to Friday, and they're doing 2 to 3 pairs within that, depending on the sector. What sort of return would you think on that person? Because what are your thoughts on trading every single day in the first place? I know you've already mentioned about it doesn't seem something that's very profitable.
I wouldn't trade the same thing every single day. Put it that way. If I had a portfolio, right, and I was afforded an opportunity every day within my portfolio, then yes, I would trade every day. But I only trade when the market allows me to. Right? I.e., it's at a place where I'm interested in trading. If you've only got 2 or 3 pairs that you're looking at, like, mate, they ain't hitting levels that I would sit down with you and show you, right? They ain't going to hit levels every week or every day. No chance. So basically what you're doing there is you're fishing for trades. Yeah? You're fishing. Now, I would do the same thing, but what I would suggest is there's a river, there's one bank, there's another bank. I'm going to put my rod and line in there and my rod and line in there, and I know that the fish have to come either up here or down here. They have to. Yeah. Anything in the middle, not interested in. Not interested in. And it'd be difficult on a daily basis to sort of sit there and make sort of it's kind of with any certainty really and again, because people are all trading in one direction, right? So what direction is it going to go in? So you're overdoing it for me. Do you know what I mean? And that's one of the worst things, because people think that trading is like real life. So real life, okay? The more hours I work, the harder I work, the more I kiss the boss's arse, all stuff like that, the better it's going to be for me financially. So you have this ethic of got to be busy, got to be busy, got to be busy. You put that into trading, forget it. So I say to everybody, I've never done a real day's work in my life.
The funny thing is, I've seen people, obviously, scalpers, for example, on the retail side, where they're trading maybe a few hours. Their trades last a few hours of the day. They're in and out. They're taking maybe 2 to 3 trades a day. I won't say 2 to 3, 2 trades maybe a day. Yeah. And they're playing their edge, right? So they have a particular system. So they're using technical analysis. With that technical analysis, it's very specific of what they're looking for. There might be timing involved as well, interestingly enough. So they might be using certain timings with certain things in the charts. And then they're being disciplined to stick to that. They may have a fixed sort of risk to reward based on their trades, their risk per trade, their rules on break even, going risk free and partialing trades, etc. So they have a very stringent process. By sticking to this process, they are profitable and been profitable long term and have the receipts, if you will, and the track record to prove that. Would you say that is possible then? So even though it's not the trading that you've done.
Yeah, I'm not saying look. I'm not saying look. I am God and you must do what I bloody say. Do you know what I mean? I'm not saying that. I'm just trying to bring a different perspective to the table.
Definitely.
Do you know what I mean? If you have found something that works for you and it's consistent and it's profitable, then, mate, if it's making you money, brilliant.
Would you say that as part of that? Well,
I was just going to say, what I'd much rather do is go, right, there to there, trade on, get up, walk away. I've got other stuff I want to do. Do you know what I mean? That for me, that's freedom. If somebody says to me, I want financial freedom, but then I've got to sit there in front of a chart all bloody day, I'm like, right, mate, what are you doing? You're just swapping one bloody job for another one.
Yeah, exactly. No, this is what I was going to lead on to, is that I feel like, obviously, majority of people lose. So the reality of most people being able to do that, most people this is. So there are people who do that. I know people personally who do that. And I know a decent number of people. But when we're talking about the grand scheme of the retail market and all the retail traders, the majority are trying, well, I don't want to say majority of them are doing that. The majority that I see are doing that. They're trying to trade in that manner, but they're failing. And it kind of is a good reflection and a middle ground between them and yourself, for example, of like, maybe they're just overcomplicating it. Maybe they're just on such lower time frames. And maybe if they did just simplify, whether it's going to the much higher time frames or somewhere in the middle, but took a very similar stance, maybe they would perform a lot better and actually be putting less time in, taking less trades, but their performance actually perform better overall.
Less is more.
That's
Less is
one of
more.
my favorite sayings.
Yeah, I mean, totally. Less is more. You know, it's for me, the thing about trading, I think that most people find the most difficult is, forget the market. It ain't the market. It's you against yourself. Right? It's you against yourself. So you're going to have these, you know, I don't know, angel and devil on your shoulder. Do you know what I mean? You're going to have that, and you're going to have self-doubt, and you're going to, do you know what I mean? But you just got to try and work your way through it. So I say to people, you have got to become the best loser on the planet. And they're like, what? Okay, you have to be the best loser. As in, it don't affect you. As in, if you lose on a trade, right, you're not staring at the bottom of a bottle of Jack Daniels, right? And if you win on a trade, you ain't spraying champagne all around the house. You have to be centred. Do you know what I mean? Because you have to understand that, yeah, look, my graph, yeah, my P&L, it's not going to be a diagonal line. Yeah, it's going to look like a chart because it's going to go up and down and up and down and up and down and up and down and up and down. It's getting used to it. And I think because people aren't, I suppose, taught that in sort of any other walk of life, it's very difficult. Do you know what I mean? It's not like being a surgeon and going, oh, yeah, blimey, look, this guy here and this one stuck his leg back on. How did the third one go? Well, not quite so well. Do you know what I mean? It's forget it. It's not like that. Do you know what I mean? It's you have to get used to losing, but not letting it affect you, your emotions. And I think that's what a lot of people do. They can't handle their own emotions.
Do you think they create a fantasy of what trading looks like? So I've spoke about this recently. It's like not only on that front in terms of wins and losses, but also in terms of money. They think that once they see some profit, or let's say they're consistently profitable for 6 months and they're making good money finally, they think that something, trading becomes easy. Not in the sense of maybe their technical ability or what they're looking at, but just like suddenly becomes easy. It's like reading a book. They'll know where the market's going to go, or they can just turn up and do whatever and become very second nature. Versus the reality, in my opinion, and I really would love to hear your thoughts on it as well, is that no matter how long you've been doing it, no matter how well you've been doing it, every day is still that same challenge, if you will. And it's not it's not a negative thing, challenge, right? No. It should really be something that, because you're passionate about the markets, is something you're excited for, to try and essentially win and overcome that challenge. Yeah. But that's the reality of trading. Whether you've been trading 5 years, 10 years, 20 years, like you're always going to have those challenging moments and come to the table and have to be disciplined and follow the rules. Yeah.
Well, I mean, that's the thing as well. Is, like when you're on a trading floor, I mean, mate, it can be quiet, boring, and then bang, and you've got to be able to switch on straight away from doldrums and mucking around and, do you know what I mean? Stuff like that, to be bang, serious focus. And it's just like, that can come at any time. So you always have to be battle ready, I suppose. Do you know what I mean? You have to be like that. But you have to have a passion for what you're doing. If you haven't got a passion for what you're doing, forget it. If somebody gets in touch with me and they go, yeah, can you teach me how to trade? It's a bit of a hobby. No. Not at all. Right? What do you mean it's a hobby? Hobby's bloody gardening or golf. Do you know what I mean? This is a way to make money. It's not a hobby. Do you know what I mean? And then I kind of get a little bit defensive and go, you're making a mockery of my whole entire career being a freaking hob. Not going to be Mark Baum.
That's it. I know you're fighting it.
Yeah, I am. Because I could rant on for ages, do you know what I mean? But I don't want to, and I don't want to become across as just this arrogant knob. Do you know what I mean? No. The thing is, because I've actually really been there and seen it and done it, do you know what I mean? I have such a passion for it. And my thing is through that passion, I try to tell people, stop stop watching these videos, stop, tell you a good one, you're talking about prop firms, right? So I got invited by the Fivers, right, last summer to go and do a speech, right, at one of their events. That was super weird. I was like, when the universe just aligns sometimes, and you're like, that's so strange. So I get this call, right, out of the blue, and he goes, "Hi, this is Ken Davis." And I said, "Fucking hell, Ken, what you done to your voice?" He goes, "Sorry?" Right? My man used to sit next to Ken Davis at Triland Metals, and they sat there and squabbled and argued and were best mates for, a good 15 years. So I said, "Fucking hell, Ken, what you done with your voice?" He was like, "Sorry?" I said, "That's not Ken Davis from Triland, is it?" He went, "No, but my name is Ken Davis." I went, "Well, that's weird," right? So anyway, Ken puts it all together and stuff like that, and we go down, and it's on the King's birthday, right? And so I'm going down on the train, and I'd completely forgotten it was the King's birthday, right? And I'm thinking, bloody hell, this train's well busy for a Saturday morning. Do you know what I mean? What's going on? And because I get a newspaper, and I'm like, oh, it's King's birthday. Right, fantastic. So I get out of the station, right? And I go, I ain't getting on the tube. Forget it. It's gonna be mobbed. It's hot. Do you know what I mean? And I've got a shirt, jacket on. I don't want to get there like a sweaty mess, right? So I'll jump in this cab. I said, "All right, mate, take me to Westminster." He goes, "Blimey," he went, "You're asking for trouble." I was like, "Why?" And he's like, "They've shut loads of the roads off and all stuff like that. It's King's birthday." I was like, "Yeah, I know. I found it out on the train." And he goes, "Anyway, what are you doing?" I said, "Oh, I'm giving a speech on trading." He goes, "Oh, you don't know Paul Mason, do you?" I went, "What, Pexy?" He went, "Yeah." I went, "Yeah, my old man gave me his first job." Of all the cabs in all of London that I could have jumped into that morning, why did I jump into that one? Right? Really weird. So I'm sitting in the back going to the old man, right? Very funny. So anyway, look, I get there, do this speech, and I've got people in the audience, and they're sitting there and they're looking at me like I'm talking a foreign language, all right? Completely foreign language. And I then get outside, and I'm in the halls, and the people are coming up and they're talking to me. I was there for a good couple of hours after that, and then I'm supposed to go and do this Q&A session, right? And so this fella comes running over. He's like, "You're supposed to be up on stage during the Q&A session." I was like, "So sorry." Right, got a dash, run in, jump up on the stage, get a mic thrown at me, and the guy that's asking the questions goes, "Paul, is there something, or what do you think? What would you say?" And I was like, "Sorry, mate, missed the first question. What was it?" He goes, "Is there something you could tell all the people in this room right now that would help them straight away?" And I went, "Yeah, stop listening to these knobs on YouTube." Right? And you just see people are just like, some of them were just in hysterics. And of course that went down like a lead balloon. They haven't invited me back for this year.
That's fair enough though. Fair enough. At least you're able to speak your mind. A lot of people in those positions, they don't. They just sort of go with whatever the narrative of the day is.
Of course. And it's a circuit, mate. Do you know what I mean? It's a circuit, and all of these answers are always, rehearsed, and do you know what I mean? And it's just like, some people go, "Well, how should I trade?" Find a way that works best for you. It's like, fuck off. I mean, how's that going to help? Do you know what I mean? How's that going to help? I heard somebody say, "What time frame should I be trading from?" The answer that was given was the one that looks most aesthetically pleasing to you. How is that going to help you? It's not. It can't. Do you know what I mean? And like I say, they were looking at me, and I was talking. And it's like, why is this guy not talking about Fibonacci levels and Bollinger Bands and all stuff? Because this is the stuff that we know.
Yeah.
Do you know what I mean?
Yeah.
And just standing, just looking at them. And I came away from there, I was like, they didn't understand a bloody word I was talking about. One did, bless him, and approached me, and we, sat down, mentored him, whatever. But yeah, out that whole day, and I'd already told Ken, the only reason I'm doing this is to annoy people. Yeah.
You didn't mind?
No, he didn't.
They like it sometimes,
Yeah, well, that's the thing. He goes, "Look," he goes, you're going to be totally unique here, because all these other bods, none of them have ever worked, non-trading floors or
yeah.
anywhere near it. So he said, just come and tell your story, just give a different perspective. But yeah, like I say, I haven't been invited back.
Well, that's what I love about the platform we've tried to build here, is that it doesn't matter. Like, some people can have the complete opposite opinion to me, and it's not a problem, because this whole thing isn't about what I think. It's about the guests highlighting different perspectives, different experiences, different viewpoints within our industry, the industry that we all love. And that's what I enjoy most, So like, even with like the prop firm stuff, I think I understand the negative aspect of them, but I understand like the opportunity they're providing right now for a lot of I've seen traders make millions from prop firms.
Yeah.
That's incredible.
Yeah.
But again, I also recognize what you've said and other people have also said and highlighted, and it's absolutely fine. I'm not going to sit there and be like, please don't say please don't say this.
Yeah.
And I think it's important though, because I think the whole point of a podcast, but just generally as well as human beings, that we have to have conversations, to be able to, you've got this experience that I don't have. You've had these insights that I don't have.
Yeah.
And even then, like, just through this 1.5 hour conversation, I've learned so much, like taking on different perspectives that I wouldn't have known. Even just on the very simple point of like the commercial aspect of trading. I wouldn't have thought of that, and that's probably why we see a lot of from hearing that, my thought process is then like, this is probably why we see these chunks of consolidation on the charts. It could just be a lot of this commercial transactions going through the markets. I don't know. That's me like trying to piece the market together to predict.
Well, people go, London open, right? London open, London close. Right, well, the market's moving. Right, yeah, you got market on open orders. Some of those market on open orders, right, they'll come across from Asia. Right, so let's just say that you've got an Asian client that's given your Asian arm of the bank, right, some orders, and basically then says, look, if nothing done, do it on London Open for me. Yeah, so you've got market on open orders. So you could have a market that's, I don't know, been ticking down for the last couple of days, and then just randomly on one day you go, dink, it goes up a bit. Why? Just because you've had those orders at that particular time of the day. Or you'll have market on close orders. Right, so you give me an order, and you go, look, mate, nothing done, just do it on the close for me, yeah. And so, again, you can have movement at certain times of the day, yes, but for a specific reason. Not because, this bit of news come out, or this come out, or this, this bloody, I don't know, Fibonacci level retraced to hit. No, understand, orders again. Do you know what I mean? But those sort of things aren't ever spoken about because they're not used in the, in the retail world. Do you know what I mean?
No, definitely. Definitely.
But that's why markets can move at specific times.
There we go. No, I like that, because again, I wouldn't have thought of that. And it's just, the interesting thing is, it's simple as well in terms of order. It's just orders, right? It's just understanding there's buyers or sellers or orders being placed within the markets. In terms of the orders though, and sort of like where we progressed to, we've talked about charts, but like when you started, there weren't charts. We discussed this very briefly before we started. Like, what was that like in terms of trading, but trading without charts? Like, what was the process like as well?
Well, I tell you what, I've lied to you. There were charts, but these were A1 pieces of graph paper, right, that were stuck together by a guy in the office, Paul Gordon, right? Absolute fucking maniac, brilliant guy, but bloody nutcase. But we would have to, it's like a giant origami session in the morning, right? So you unfold these bloody things, and he'd been keeping, records of price since the 60s. But literally all we plotted was open, high, low, close. That was it. That was as advanced as it got, right? But then even from there, just looking at that, right, knackered old bits of paper, it was hilarious. But you could see, right, price above this price here, I should say, right, above here. What's the market do? Rises. Gets back to it, rises again. Gets back to it, changes value, comes down. What happens? Rises, hits it, reverses, comes down. So, that's an important price, because this is where the market is moving to and from. So, yes, I lied to you. Yes, we did have charts. But
they were just paper.
They were just pieces of paper. Right? But, I mean, like I said to you, so you get there's a screen. It's just got prices on it. That's it. And there's quotes from, brokers and banks on the LME. Or you'd have this monitor that I had like literally on my desk right in front of me. But it was like this, it's about this big, right? It was about this deep, and it was just a black screen with green text on it, green writing, and it was just prices, and that's it. But that again that concept hasn't really changed, because all you're doing, if you look at a proper institutional trading desk, what have you got? Just numbers. It's not charts, it's just numbers. So if you already know where you want to trade from, I don't need a chart. I just need a price. That's all I need. So, yeah, sorry, I did lie to you. That was
That's okay. We'll accept it. I will accept it. But in terms of like placing the orders, etc., back then, there, because you were mentioning that you would have your market maker essentially, and you'd have the pits, right?
Yeah. So, again, if what I need you to imagine is, so the metal exchange itself is a physical trading floor. It's the last open outcry market left in Europe, by the way, so it's still going.
Still going now?
Still going.
Wow.
But you had to physically travel, right, from one to the other, right, if you were on the floor team. You would also have people upstairs, right, who would be looking after customers and stuff like that, funneling orders down. Now, I'll tell you a story in a minute. Possibly the funniest thing I've ever seen and to been a part of on a trading floor. It was hilarious. Customers ring in, right, I want to buy 10 lots of copper at 24.45. Okay, thank you. How long's the order good for? GTC, so good till cancelled. Okay, so you physically write that on a ticket. Now, I remember at Rouse, the copper ticket was pink.
Really?
Right? So what do? So you timestamp it for a start, right? So you timestamp it, and then you write such and such customer code name, wants to buy 10 lots here, order GTC. You get that, and you go and place that on the copper trader's desk, right? Then, when you physically go down to the trading floor, right, and if you haven't fulfilled that order and you're still working it, what's going to happen is you're going to have somebody upstairs in the office whose specific job is to take any business from the people around and funnel it down. But also, if you're still working those orders, you're going to have what's known as an order book, right, down on the floor. And again, it was a book, not a computer. It was a book that you physically had to write in, right? And so you'd be working all of those orders. Now, again, you'd give that to the trader when it was relevant. You know, you wouldn't give him a copper order in the aluminium ring because it ain't relevant, right? But you remind him, look, you've still got this to do here, and blah, blah, blah. So then you'd have people physically on the phones, on the floor, relaying prices back to customers. Customers are then going to give you orders, tell you what to do, and then you give that to the person standing behind the trader, who then feeds it to the trader, who then executes the order, and then that comes back, and that comes back, and that comes back. That's how things were done. So, one day, working at Sugden, we had started to do business with the Chinese, right? And it was decided that it would be a good idea to employ a native Chinese speaker. Right. Okay. This is where the calamity started. So Kathy, bless her, she'd been with us for about 2 weeks, came from China. Okay. So there's a bit of a language barrier, so to speak, right? So she had what's known as scale down buying in lead. Do you understand what I mean by scale down buying?
I don't necessarily.
Scale down. Let's say I've got 500 to buy at 2,000, 500 to buy at...
So splitting the order.
Yeah, so it's the same amount, but then at different price levels. Yeah, that makes sense?
I got you,
Yeah. So anyway, so she gets that order, gives it to the lead trader, he's there, we then physically go down to the floor. You got a guy upstairs in the office, and you got a kid on the floor, Scooter. I never remember his real name, right? But Scooter's his nickname. And he's on the floor and he's doing the order book, right? So he's working those orders. Again, it's one of those days, pretty quiet, pretty flat. And then all of a sudden, bang, it goes ballistic, right? So anyway, he's on the phone to the office, like, no. And all of a sudden, and this is the thing, so these all conversations were taped. Right? So we went back and we'd listened to this conversation because the kid was crapping himself at the end. But it was hilarious. So he's just talking to someone, and all of a sudden you hear, "Scooter!" And he's like, "Yeah? My red orders." "You what?" "My red orders." "You what?" "My red orders." "Do you mean lead?" "Yes." Right? He goes, "Yeah." She goes, "If you can't buy it, you can sell it." He goes, "Okay." Drops the phone, runs down to the front, jumps up on the back of the lead trader. He goes, "Cancel the lead buying, sell it." He goes, "All right. 3 months lead, 95 I give, 500. No, I'll take 50. 95 I sell, 93 I sell, 90 I sell. Right, you've sold 500 at this, you sold another 500 at this, and I'll give you an average price at the end." So Scooter's like, "Okay," runs back, picks the phone up. He goes, "Right, you sold 500 at this, you sold 500 at this." He's like, No, you can sell it." He goes, "We are fucking selling it." And then he comes back again, another 500 here, another 500 here. He goes, "You sold another 500. She's like, No, you can sell it." He's like, "We are fucking selling it." Then, Rob Montefiore, bless him, still at Sigden, here's what's going on, drops his phones, he's up in the office, drops his phones, goes running over, grabs the phone out of her hand, and goes, "She means cancel it." And you just hear him go, "Fuck." Goes running back down the front, buy 2,500 lead at market. And he looked at me, he went, "What the hell is going on?" And he was just like, we got to the end of it and we listened to it and he was like, "She told me to sell it. She told me to sell it." Well, that's what I thought she said anyway. So yeah, if you can't buy it, you can sell it.
That's crazy, though.
Yeah.
That's crazy. Like, I'm guessing like things like that probably, maybe it doesn't happen all the time, but I'm guessing it would have been quite a regular occurrence when you're talking about like writing orders down and using a lot of phones. You know, misinterpretation must have been happening quite often.
Misinterpretation was just hilarious. I mean, I remember a guy, Barry Smith, Jaws was his nickname. I gave him some SEO orders, right? Stop, close only. I'll tell you what they are in a minute. Stop, close only orders. And I went, right, this is in the nickel market. And I went, right, buy this, stop, close only. Buy this, stop, close only. Buy this, stop, close only. I said, "Do you know what stop, close only means, George?" And he goes, "Yeah." All right, 2 minutes in, all your stops have been filled. I went, "What do you mean all the stops have been filled?" It says stop on the close only. If the price closes above this price that I've given you, then you have to fill me. Oh. Well, I don't know what stop, close only orders are. I was like, "What? I just asked you. You said yes." "Well, no, I didn't really know what I meant." Well, don't accept the order if you don't know what if you don't know
what
I
happens
mean.
in those moments, though? Like, if obviously a mistake's been made, a miscommunication's been made, is it just written off?
We have to. Do you know what I mean? You have to write it off. And sometimes they're very funny. Other times they're very annoying. Do you know what I mean?
Was there ever like a really stressful time that comes to mind, like something that really put you on edge? Of whoa, that was a bit of a, whether it's a mistake or whether it was like a trade.
Yes, one that really did put me on. I remember it. It was Hugh, right, Leffany, and he'd been out to lunch, and let's be honest, he was pissed as a fart, right? And he's rung into the floor, and I was like, "Hi, Hugh." He went, "Hello, Devoy." He said, "Do me a favour." He said, "Sell me 100 zinc." I said, "Right, okay." He sold zinc, sold 100 at 2,000. He goes, "Right, sell another 100." I said, "Right, okay, done at 95. Sell another 100. 94. Sell another 100. All right, 90. Sell another 100. I was like, right. And then he goes to me, "Sell 700 on the close to square me up," and put the phone down. And I was like, "What do you mean sell 700 on the close to square you up? You just sold it. Does he think that he's bought it? What does he think?" And I kind of frantically ringing his bloody mobile, which is not going through, so I don't know how he rung in. And I said, "I like to make a judgment call. Now, either he is short 1,400 lots of zinc, which is a lot, right, which is a lot, or I square him up and I buy them back." And I had to make that decision. And I was like, "Jesus, have I made the right decision?" Do you know, because I couldn't get hold of him. And I was like, God, he said square himself. God, right, buy 700 on the close. Next morning, I didn't even see him. Next morning, comes into the office. MD, Michael Overlander, calls him in. You're not to trade again. Right? So he's punting with his own money. It's his own money, right? So, but you're not to do that again. So he comes back over and I said, did you mean to be short 1,400 zinc or did you want to be square? He went, I wanted to be square, dear boy. I was like, thank God for that.
Did you make money on the trade, lose money?
No. No. He lost about 30 grand or something like that. But yeah, he wasn't allowed to trade that. He wasn't allowed to do that again. He was allowed to, it's his own money, he's allowed to trade. Do you know what I mean? But yeah, that put me on the spot because I was like, because it's options, right? So it's options. He could have been essentially hedging an option with the underlying. Do you know what I mean? He could have been doing that, and he could have been doing that on purpose. But I knew what he was like, and I knew that he'd been out to lunch for a long time. So I'm like,
what was it like culture-wise? Is culture like that? Just very. It's kind of like you're on edge, right? And you're in the zone, and you're doing all these orders, etc. Everything's flowing, but then you also it kind of seems like a more of a leisurely environment. Also, like everyone sort of. It's kind of like everyone sort of knows each other, is building the relationship with each other. There's a lot of banter, as they will say now.
yeah.
People are really relaxing on lunch, etc.
I didn't. My lunchtime was from 1:30 till 3:20.
Yeah, that's enjoyment. That's enjoyment,
right? Mm-hmm. That's a long lunch.
Yeah.
Do you know what I mean? Especially if you go, oh, should we just have a quick beer? Do you know what I mean?
Mm-hmm.
It weren't just one. You know, you could end up having 6 or 7, and then you've got to go back to work. Do you know what I mean?
Mm-hmm.
You've got to go back to work. And I mean, I remember it was a particularly hot day, and we're outside Liverpool Street Station, and I think Bud Ice, I don't think they even sell that anymore. I remember necking about 7 bottles of Bud Ice, and I was like, oh God, I feel a little bit wobbly. Didn't have anything to eat. And I got down to the trading floor, and my boss, Chris, he was like, right, Simon in the office, right, has been buying zinc all lunchtime. Get him on the phone. Simon Armsby. Get him on the phone. Put him up. All right, Simon. He says, yeah. So blah, 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 blah. Taking him through. Buy 100. Chris, sell 100. All right? And he went, okay. Sold 100. And I went, right, you sold 100. And he was like, I told you to fucking buy it. I was like, yeah, I said the wrong word, didn't I? Sorry. Chris, can you buy 200, please? And he just looked at me and he went,
That's just what it's like, man.
Yeah, do you know what I mean? Mm-hmm. But yeah, no, I mean that's the thing, because sometimes it's so fast paced that sometimes you do screw up.
Yeah,
do you know what I mean? You do screw up, and it can cost money. And I mean, you know, with the lead, we ended up making money. He was so aggressive when he was selling it that other people and other companies are listening to this, what's going on in the lead market, and thinking, blimey, we better get on the back of this. Do you know what I mean? And so they get their orders coming, and we managed to quietly buy it back. We made a few quid out of it. But yeah, it's so fast paced sometimes, and you just you forget an order or sort of something like that. I mean, I remember having 3 phones on. Right, so I've got one here, and then I'm holding one upside down in the middle.
Yeah.
Right. In the middle, and I've got orders coming in. I can't write them down. Yeah? And it's like, buy 50, buy 25, do this, do that, borrow this, borrow that. And I'm like, I can't write this down. And I've got a lovely lady called Janet Mirazola on my left ear. And I was like, Jan, can you write down what I'm doing? She went, yeah, sure. What are you doing? She's over in New York. She went, sure, yeah, what are you doing? So I said, what have we done so far? So she says, bum, 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 bum. I said, right, we've done that. Bum, 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 bum. So she's clerking for me my other customers' orders and her customers' orders that she's giving to me, because I physically cannot write anything down. Do you know what I mean? And it's bonkers.
Yeah.
And then it's come out and it's just like, right, what the hell did we do? Because you don't even remember what you've done. Do you know what I mean? Because it's so fast paced, and it's like a couple of, I don't know, I don't want to equate it to it, but I've taught a couple of soldiers and ex-special forces people, right? And I said to him, I walk out of that market sometimes, right, like in a daze. You're just full of adrenaline. Do you know what I mean? And then you're walking down the road and you've got like secretaries and lawyers and, do you know what I mean? And you're walking down the street and you're like, you've got no idea what I've just been through today. Do you know what I mean? Again, not to be an arrogant idiot, but you know what I mean? It's really stressful.
It's the heightened, it's like the overstimulating environment. It's just too, like, there's noise, there's so much input, so much output all at the same time.
All at the same time. Yeah. And they said to me, like she said, that's what it's like when we come back and we walk down Civvy Street. You just look at people and go, you got no bloody idea. Do you know what I mean? I mean, I remember sitting there on the train trying to read the Evening Standard like this. Yeah. Do you know what I mean? Just full of adrenaline. And it's but I mean, again, there's a lot of cultures that go, they're always out on the piss. Sometimes you need it to just calm.
Kind of fuels it,
Yeah, but to just calm back down again and just try and relax. Do you know what I mean? Because you wouldn't be a very nice person if you turned at home, you know what I mean, full of adrenaline. You've got to get rid of it.
How was it stepping away from that environment then, eventually, like when things sort of shifted?
I miss the people. I miss the banter. I mean, that was just brilliant. It was like being at school with your best mates, right? But you're getting paid. Do you know what I mean? It was absolutely brilliant. And I worked with some people that are just so stupidly funny, so super fast. Do you know what I mean? With their put downs and stuff like that. I mean, God, I remember Puffy. We called him Stay Puff because he's Stay Puff Marshmallow Man from Ghostbusters, right? His nickname was Stay Puff, and he's a big guy, John, right? This is when the Nintendo Wii had first come out, right? So it's going back a while. And he comes into the office and he goes, my missus bought me one of them Nintendo Wiis, right? He goes, and I've got the Wii Fit board. All right, we're like, right? And he goes, I put it on for the first time last night. He goes, I stood in it and then someone shouted out, what did it say? One at a time, please. Right, just instantly. Instantly. And of course, then you're just, everyone's in hysterics.
Yeah.
Absolutely in hysterics. I mean, Jaws, again, guy, I love Jaws. He was just absolutely hilarious, the things that he would come out with. I mean, just, you're killing yourself. You're killing yourself laughing because you just think, Jaws, mate, come on, switch your brain on.
And those environments can be so fun and addictive almost, gives you energy. You feed off each other's energy, especially in an environment like that, especially because you have that banter and that sort of family-esque vibe because you're all doing the same sort of thing. And the thing is, like, the average retail trader, and we'll finish up with these last 2-3 questions here, but like the average retail trader finds themselves alone a lot of the time. They don't know other traders. They're not in those environments whatsoever. They're at most in their own. They have an office at home, for example. Yeah. So how important would you say it is to sort of, even if they are other retail traders, but how important is it to get to know other traders? So people who understand what you're going through, understand the sort of endeavor you're trying to go down.
See, that's a toughie.
Interesting.
That's a toughie. Why? Well, because if you're a professional and you're working with professionals, then you all understand it to the same level. Right. Retail, totally different. Yeah, totally different, because you could have had someone that's been training for 6 months or 6 years and, I don't know, a year, 5 years, whatever, something like that. And this one's been through a lot and this one hasn't. And this one tells this one, don't do this or don't do that. And this one's like, well, why can't I do this and why can't I do that? And I don't know. I said earlier, switch everybody else off and just solely concentrate on yourself. Yeah. Because you don't want to get swayed by other people's opinions. Do you know what I mean? It's different if you're the one that's generating those opinions. Do you know what I mean? That's a totally different story. But for me, yes, it could be a very lonely experience. But I'd rather it be a lonely experience and make my own mind up than have loads of bloody people sitting there talking to me and confusing me, and I don't know what to do because he said that and he said that and she said this and she said that. Well, what do I do? It's confusing.
That's fair.
So,
because you mentioned earlier about, and this is kind of off that topic, but you mentioned that you were in a position where they wanted you for a job, but they said to you, you got 3 months to make it work. How helpful or not helpful was that to have this, because a lot of the time in trading we say no time restraints, don't put time restraints on yourself. But also equally having pressure and applying pressure can also make diamonds, right? So like that it can push you to do best. Like how important was that for you to be pushed in that way to sort of excel and make sure you could fit that role, if that makes sense?
Yeah, there was pressure there. Was it pressure from Choose? No, it's pressure from the old man. Do you know what I mean? You do as you're told, stick your head down, get on with it, you'll be okay. But I mean, again, at the age of 16, I mean, I didn't know what I was doing. Do you know what I mean? I didn't know.
Growing up, did you think
what
of
it would lead
following
to?
on into your dad's field,
No, never. I mean, that was the thing. When you're a kid, you're aware. It's like, what's your old man do for a job? Do you know what I mean? And it's just like, mine's a mechanic, mine works for BT, mine works at the post office, mine does this, mine does that. My dad's a trader. What's that? I don't know. Buys and sells metal. Oh, okay. Well, like a scrap dealer? No, not like a scrap dealer. No. He goes to work in the city in a suit. And then I literally didn't have a clue what it was. Do you know what I mean? And he didn't really prepare me for it either. Because I don't think there really is a preparing. Do you know what I mean? You have to see if you can do it. And I mean, that's the thing with the city. It's very much, there's your deep end. Off you go. Can you do it or not? Do you know what I mean? So did I feel pressure at the age of 46? I can't remember. I can't remember. I most probably did. But, yeah, do I remember that emotion or something like that? No. Do you know what I mean? It's like somebody once asked me in an interview, do you remember your first trade? I'm like, mate, no. Do you know what I mean? Yeah. No idea. I've done bloody thousands of them. Got no idea. You know, it's... Yeah, it was... I suppose there was pressure, but I don't remember it. Yeah. You know.
Well, as a final point then, what would be your biggest advice to traders out there, especially knowing that it's probably the largest retail audience, podcast wise, it's a large retail audience. Like, what would be your message to that retail audience? What I'd say is look down this camera, so your camera, and then you just deliver that message. Whatever it is, you full reign.
Don't believe what you read. Don't believe what you see. Don't watch YouTube. I appreciate this is going up on YouTube, so I totally can feel the irony coming out there. Form your own opinions. Learn the rules of the game. Understand it is a game. Take your ego out of trading. Time doesn't exist. Price levels exist. Ranges exist. Use that. Forget basically 99% of what's out there, because it's just a pile of shit. And I would just sincerely say, good luck.
I love that. Well, Paul, it's been an absolute pleasure.
And you, mate.
I really, really, hopefully maybe we can do something again in the future. I will invite you back. They might not have invited you back, but I will.
Oh, that'd be good. Definitely. Then I'll definitely go full barrel mode.
That's it, prepare ourselves. But everyone at home?
Crash helmets.
That's it. We're ready. Drop a comment with your biggest takeaway from today's episode. Yeah, drop a comment with what you would like to hear from Paul next time, potentially. But the links for, there won't be many links, maybe a website.
PaulScottFX.com.
There we go. That will be in the description below, so make sure you check that out. But until next time, everyone, take care.